Howdy everybody, welcome back to Accounting 1101. I'm Professor Martin. In our video today we're going to be talking about the accounting equation. At the end of our last video I mentioned our topic, the accounting equation, going to be one of the most important topics in helping you understand accounting. Now, some of you, when you hear the word equation, you're going to be ready to bail. You're going to say, you know what, that's it, here comes the math, I'm done. Hear me out. You can be an accountant if you know how to add, subtract, multiply, and divide. Those are really the only math skills you need. So don't freak out. Hang with me. Even though we're talking about equations right now, all you really need to know about an equation, first of all, equations have two sides. Left-hand side, right-hand side. You also need to know that the two sides need to balance. Whatever's on the left-hand side needs to equal whatever is on the right-hand side. I'm not going to be throwing a squared and b squared and all that crazy stuff at you. All we need to know really about our accounting equation is it has two sides. Two sides always have to be in balance. And so our format for our equation is going to look like what you see right here. On one side we'll have one thing. It's going to be equal to two other things on the right-hand side that are added together. And we're going to fill in the blanks during our video right now. So, the accounting equation. Why is it so important? It is literally the foundation that all accounting is built upon. All right? And it doesn't matter if we're talking about Accounting 1101 here at a community college, or if we're talking about Accounting 5200 in the honors program at the Ohio State Graduate School of Accounting. The accounting equation is the exact same. And so this isn't something that I'm showing you now and then later on you'll learn the real thing. All right, this is it. The real deal. Doesn't matter whether we're talking about beginning accounting or all the way at the top of the academic world at the graduate program at Ohio State. The accounting equation is going to be the same. It also doesn't matter if we're talking about a local small business like Kava House, our coffee shop here in Wilmington, or if we're talking about the biggest coffee company in the world, Starbucks. The accounting equation is going to be the same for both of them. All right? And so I can't say it enough. The accounting equation, knowing it, learning it, understanding it, is critical to you being able to understand accounting. So let's go ahead and start figuring it out. Here's our format for our accounting equation. On the left-hand side, we're going to have something called asset. All right. Asset, simply stuff a business owns. Let's talk about Walmart. Use Walmart as an example here. You've been in Walmart before, I'm sure. What does Walmart own? Well, they own inventory. You walk through Walmart, you can see all the stuff sitting on the shelves. They've got all that inventory. Walmart owns inventory. They own all the shelving that the inventory is sitting on. They also own all the refrigerators and freezers and all that equipment that they have to keep the produce cold and the frozen food frozen. They own cash registers, and right now most all the registers at Walmart are self-checkout kiosks, but they own the cash registers. You know, they own the cash inside of the registers as well. And then, of course, you know, they own the buildings, and they own the parking lot maybe, and all of that good stuff. We see semis driving up and down the road with Walmart on the trailers. Walmart owns that. So Walmart owns a lot of stuff. That stuff has a fancy accounting term. That fancy accounting term is asset. An asset, simply stuff a business owns that they're using in the business. All right? So that's our first part of the accounting equation. If we look at the financial reports, we can see what Walmart owns. You can see right here they have assets, cash, inventory, as I mentioned, property and equipment. I mentioned all that. There's some stuff on here we don't really know about yet, but we'll get into it as we continue on in our time together. But you can see all of that stuff that Walmart owns right there is considered an asset. And in total, they have $243 billion with a B dollars worth of assets, because all these numbers here are stated in millions. So $8.6 billion in cash, $56 billion in inventory, $100 billion of property and equipment. A lot of stuff that Walmart owns. $243 billion all told. So, on the left-hand side of our accounting equation, we have assets, stuff a business owns. And for Walmart, that was $243 billion. What is that going to be equal to? Well, on the right-hand side of our accounting equation, we have two different items that we're going to add together to make our equation balance. First one is going to be liabilities. Liabilities are debts that a business owes to a creditor. And a liability, no different than you might have a liability for your car or your home. Exact same idea. We look at Walmart again, we look at their financial reports, we can see they report their liabilities, and they have things like borrowing, they may owe some income taxes, and long-term debt, maybe like a mortgage or a bond that they've issued. But all those amounts under liabilities are amounts that they owe a creditor, that they owe other businesses, or that they owe other people. All right, liabilities. They're liable to pay those debts. You can see all told, Walmart has $159 billion of liabilities, amounts that they owe creditors. Go back to our accounting equation. Assets equal liabilities plus equity. Equity represents the owner's stake in the business, the amounts that have been invested by the owners or that the business has earned and retained in the company. Go back to Walmart here. See, they report equity, common stock, and capital in excess par value of common stock. You can add those two numbers together. They represent what owners have invested into the company. They have common stock to evidence that ownership. Retained earnings represents the money and profits that Walmart has earned since they've been in business and kind of cumulatively added together. Earnings that have been retained by the company. So, the owner's stake in the business. Total equity, you can see down here at the bottom, $83.7 billion. So let's pull it all together. We have assets equal liabilities plus equity. That is our accounting equation. Write it down, commit it to memory. You have to know it, you have to understand it. Assets equal liabilities plus equity. And maybe get a tattoo. You can be hardcore accountant, get an ALE tattoo. I'm not sure how you're going to remember it, but you have to remember assets equal liabilities plus equities. You can see we plug in Walmart's numbers. In fact, assets do equal liabilities plus equity. So, again, just to review, assets, stuff a business owns. That's going to be equal to who has a claim to the assets. Is it a creditor or is it an owner? Everything a business owns is equal to who has a claim to the asset. It could be a creditor or an owner. All right, the accounting equation. There it is again, assets equal liabilities plus equity. We can also look at it in the context of your own personal life. As I mentioned before, if you have a car loan or you have a home mortgage, it's the exact same concept. Now, I'll just kind of show you. I've had my pickup, my beloved Toyota Tacoma, sitting out in the driveway. That's an asset, right? When I paid for it, I paid, let's just assume $35,000 is what I dropped on my beloved pickup there. Well, I don't really have enough money to walk into the Toyota dealer with a suitcase and say, hey, here's $35,000. Give me a truck. I don't have that kind of baller money. I had a little bit of money, and then I had to borrow the remainder. And so I had to take out a $25,000 loan from People's Bank, and so I could buy my truck. And I put down $10,000 of my own money. All right, so again, my asset, $35,000 truck, is equal to the $25,000 loan I took out and the $10,000 that I put in. I have $10,000 of ownership in that truck, equity, that I put into it. The rest I had to borrow. Stuff is equal to claims to stuff, creditor, owner. All right, and what happens as I pay that amount off? The liability goes down and my equity goes up, doesn't it? until eventually that liability will be zero and my equity will be $35,000. My assets equal equity. All right. You say, well, wait a second. That truck is depreciated. That truck's 4 or 5 years old now, and it's not worth $35,000. I'm talking historical cost. You're getting ahead of me here. You're using your accounting brain, and I like that. And we'll get to that. But just for now, think assets equal liabilities plus equity. What about a home? Exact same scenario. I got my house here. Let's say, for the sake of argument, that I have $200,000 is what I paid for that home. I borrowed $175,000. I put $25,000 down. Again, asset, stuff equals claims to stuff. Liabilities and equity. Creditor, owner. As I pay down that mortgage, liabilities goes down, equity goes up. Right on, everybody with me? To summarize, what's the accounting equation? Do you remember it? Go ahead and say it. Now, I'm not going to judge you. Nobody at your house is going to judge you if you go ahead and say it. Assets equal liabilities plus equity. Stuff the business owns is equal to who has a claim to it, a creditor or an owner. So, the accounting equation always has to be in balance, all right? And we can take the balance sheet information from different companies and look at the accounting equation in action. You can see I've got Disney, Apple, Coke, Amazon, and Tesla. Taken all these numbers here from the financial reports. It came from something called the balance sheet. We'll get into the balance sheet later on. But basically, I've taken assets, liabilities, and equity from their financial reports. Because we know the accounting equation always has to be in balance, we should be able to plug in the missing numbers here to make the accounting equation balance in every scenario. For instance, for Disney, I've got assets, I've got equity, but I don't have liabilities. But I should be able to come up with liabilities, right? Just by doing a little math on our equation. If I were to take $203,631 and subtract out the equity here, I could come up with liabilities. And then I could check. I could add these two sides together to make sure that it equals assets. For Apple, I don't know assets, but I have liabilities and equity. I could add together liabilities and equity to give me assets. So what I'd like for you to do, take a second, pause the video, and see if you can come up with the missing amounts for every company here to balance out the accounting equation. Go ahead and pause, and then we'll come back and we'll check your work. All right, hopefully you've paused the video. If you hadn't, one last chance before we reveal the numbers we need to make the accounting equation balance. Here we go. There you have it. The accounting equation. Two sides, assets equal liabilities plus equity, and it always has to be in balance. As I mentioned, the foundation for all accounting is the accounting equation. In our next video, we're going to talk about how to put transactions into the accounting equation, how transactions impact the accounting equation. So we're actually going to start looking at transactions, when a business sells something or pays for an item. We're going to start looking at how those transactions fit into our accounting equation. And so we're going to get into the accounting. Numbers going to be flying around. It's going to be a flurry of accounting activity. I'm excited. Hopefully you are too. If you have any questions on the accounting equation, hey, let's chat. Like I said, it's an important topic and you really need to have it down pat. If you don't feel like you do, I'd be happy to help. Reach out, send me an email, and we can either hash it out via email or schedule a time to talk via Zoom or Teams or however we're doing virtual meetings now. And just feel free to look me up. All right? Next video, as I mentioned, transactions are going to enter the picture. Until then, take care, everybody.